No audio. My chat's disconnected. Nobody was telling me. Brutal. All right, we're going to start over. It was just a practice run. All right, let me catch my breath. We'll start again. Just deleting messages, staying on topic. All right, let's start again. Gonna have to edit that video. So, the NASDAQ is weak. We've lost daily support. The S&P 500 is weak the last 5 days. The one thing that the bulls can say is we're holding on better than the stock market over the last 4 days. Absolutely. But that doesn't mean the bulls are strong in Bitcoin, obviously. So a lot of weakness in stocks. Stocks pulling back regardless of the dollar still being in a daily downtrend. The dollar still has EMA 12 resistance. It's still weak overall. And so if the dollar confirms a trend change or sees bull follow through, we can anticipate that that's going to put more downward pressure on stocks. And we're heading into the FOMC and CPI next week, Tuesday and Wednesday. We know that's a major event. And the chart that I'm watching, I talked about it in the broader market stock video yesterday, is the S&P 500 2-week time frame, because we are either going to confirm the inverse head and shoulders. That's a bad drawing. We're either going to confirm the inverse head and shoulders with a very notable momentum shift, bigger picture, or we're just going to head back to fresh lower lows like we did last time. We're going to be watching our retracement size on this pullback to gauge which is most likely. Bears want to see a pullback of over 50% to make the inverse head and shoulders less likely, and bulls want to see minimal pullback to see the higher low try and be set. And we had the same thing last time around where we pulled back, we set a weekly higher low, and then we broke support. And as soon as we broke that support, big red flag for bulls. So the bulls made an attempt to try and change the trend, and they failed. So we're watching the same thing. And we know the CPI and FOMC reaction Tuesday and Wednesday of next week is going to have significant momentum implications for the start of the new year. One other note is I'm doing a bit of traveling tomorrow, and usually when I do, that means significant volatility. So something to keep an eye out for tomorrow and Friday. So some crypto stocks, Coin hit a new all-time low today. And it came out with news that their revenues are pretty much half of 2021, which is not surprising because my fees that I'm giving them are way less than half of what I gave them last year. So seeing continued weakness as the weekly bear flag tries and confirm on Coin. Riot is holding on a little bit better, but not by much. So we're even, these crypto stock charts are even more convincingly weekly bear flags. MARA, already confirming lower lows. We know it's been a lead bear the entire time. So MARA, lead bear, fresh lows, watching to see if the other stocks follow, and then watching to see if crypto follows. But that is where we stand at the moment. Bitcoin confirmed a 12-hour head and shoulders last night, dropping down and breaking support to the lowest level in 5 days, a little bit more than that. And we currently have a 4-hour bounce underway, watching for the potential of a 4-hour lower high being set. The weaker altcoins have already set 4-hour lower highs. And there's not many altcoins right now that look bullish to me. So we're just watching for these weekly lower highs. And over the last live stream, we talked about the Atom 12-hour rising wedge, bull breaks with zero follow through. And when we're scouting, again, this is just technical analysis 101. When you're looking for a most likely scenario on whatever time frame, we can say that the most likely scenario on the weekly chart for crypto names are weekly lower highs. We can use the 12-hour time frame and look for a bearish pattern, whether it's a rising wedge or a head and shoulders. And if that bearish pattern confirms, it's the first indication that that weekly lower high is being set. So now on Atom, we have a whole bunch of space for a 12-hour lower high to be the result of the next bounce. If we confirm another lower high and lower low, we'll just be looking back down at the fear low, I should say the recent fear low at that point in time. And Mana did the same thing. Again, these are some of our weaker coins, but Mana was a 12-hour rising wedge as well. We know the weekly lower high is the most likely scenario, so we have more confidence in this rising wedge. If we're in an uptrend on every time frame, we don't have nearly as much confidence in rising wedges breaking bear. In bull markets, we see rising wedges break bull often. Bitcoin has done it very often when it's in a bull market. But we're not in a bull market. We want the lower time frames to align with the longer term time frame most likely scenario. And from there, we have higher probabilities. Had a question that I want to answer from one of the Chart Guys members. As a newer trader, they only learn to trade in a bear market, so they have nothing to compare it to, and they found a lot of this year difficult, and they don't know how much of it is the learning curve versus market environment. And they are about break even from the last year, which is pretty demoralizing. And it feels like there's been long periods of chop and relentless FUD. Is it the same in the bull market? No, obviously not. So it's obviously very different in a bull market and a bear market. But again, I've said this many times, whether we're in a bull market or a bear market, if you are actively trading, you should expect to lose money in your first year. If you don't, you're in the minority. So if you're break even on a sector that has been dropping, you could look at it and say, well, I should have made more as a bear. But again, you got to be patient with yourself because nobody should expect to trade with any kind of consistency in their first year of trading. The first year of trading is for making mistakes with small amounts of capital, learning from those mistakes, feeling your emotions as certain different environments are taking place and price action is taking place, watching how you are able to combat those emotions and react to them. It's essentially a trial run. And it's the same, again, any skill. Take any skill, ping pong, arithmetic. When you first start learning how to do it, you're not going to be good at it. So don't put too much pressure on yourself. If it's year 3 and you are underperforming and not, then you could start questioning, okay, what's going on? What am I doing wrong? But year 1 is just baby steps, feeling it all out. And the fact that you're break even in a market that is down so much, you're ahead of so many other people. You're ahead of traders you're ahead of me. I'm small in red this year. My account's down. My crypto account is down 3% from all-time highs. When I look at the crypto environment and know that I can only trade bullish, that's a huge win. That shows me, all right, I'm doing it again. I'm not giving back any of my profit because it'll be very easy for me to make 3% when the market conditions align for my trading style. But you are outperforming me this year if you are flat. And I'm on year 12 of trading. So that's a big win. So let's look at a couple other coins here. The list is a lot of red. Again, the NASDAQ was just heading down towards support. Looks like a little bit of a bounce. We're just range bound here. It's an extremely boring day in the stock market. The last 2 days were trending bear days. And then today is just sideways. It's a 30-minute equilibrium on the NASDAQ. And we could break before the end of the day. But this is the kind of day when you see this action, right? So let's compare the last 2 days. Significant opportunity for bears. Significant opportunity for bears. There's some trades in here, been pretty good about calling out the 15-minute lower highs that have formed. But the opportunity is way less significant when you're range bound versus when you are breaking from a range and creating a significant move. So this is the kind of day where, I trade a little bit on the morning, but as soon as I recognize it's just an equilibrium, I just wait and I just stop trading to prevent from over trading. So that's a little mini lesson. So this is on the 15-minute time frame for one day. What about when it's multiple months? Same thing. Wait for the favorable market conditions. It's like when you're playing blackjack and if you're counting cards, you know when it is a favorable time to be using significant capital and when it is unfavorable because you know how many face cards are in the deck and you know probabilities are slightly in your favor in one scenario and slightly against you in the other scenario. So it's just recognizing, pumping the brakes, and it's boring, right? I'm bored in crypto. I'm averaging, one trade a month the past couple of months probably, but I will have 97% of every dollar I've ever made in crypto ready to go for the next market shift, knowing that I don't need to nail the bottom to make it very worthwhile. So again, that's just my mindset, and it's not a flashy mindset that gets the clicks and gets the attention on social media, but it's the way to be trading. It's the way to have long-term success as a trader. And so even as bears, bears have had some opportunity in crypto, but not so much recently. I mean, let's just look at the range here. Percentage range from the last month of trading. That's the wrong tool. The last month of trading, we've got a Bitcoin range of 12.3%. And that is from a month. 12.3%. So a month's range. Look at this one candle. This one candle had 50% more opportunity that one day versus the last month. So it is absolutely worthwhile sitting tight and not over trading and not paying fee after fee after fee to try and scalp around these small ranges. Yes, there is some trading opportunity, but again, it's putting the odds in your favor. And if I'm actively trading here, then I am trading when the odds are against me because there is much less of a pie. Imagine the amount of range of volatility that you see as a big old pie. And the more volatility, the bigger the pie there is. And the less volatility, the smaller the pie there is. Am I going to put in the same amount of time and effort to try and get the small pie as I am the big pie? No. I'm going to wait for the big pie. And it's the same thing with the NASDAQ on the 15-minute time frame right now. This is a small pie versus the last couple of days, which had a much bigger pie. So be patient with yourself. Again, this game, it's so much more fun when it's a bull market and you can make years worth of gains in a couple of months. But that is the less common scenario. And so if you are newer, you only know one kind of market. But those of us who have been through this cycle time and time again, the raging bull markets, if you look at how often it's happened, not necessarily, I'm just talking everything in general, everything that I've traded in the last 12 years, the raging bull markets are the minority of the time. The majority of the time are big pullbacks or sideways. Not necessarily with the S&P 500, but talking about cannabis boom, crypto boom, 3D printing boom, just going all the way back to all these hype sectors over the last 12 years. So we're just in a period of waiting. And this is the time to be studying and putting in, you can't get the experience of knowing what it's like to trade in a bull market right now, obviously, but you can be preparing. You are waiting for the next time that the opportunity comes around. And again, as I mentioned last live stream, that's why I keep doing these videos. I could easily say, I'm not going to do a crypto video until there's opportunity and because I'm bored and I'm not trading it. But because I am watching it every single day, I am staying sharp. I am staying on my game. It's like the off season of a sport right now, and I'm taking reps. I'm shooting free throws in my gym so that when it's game time, I will be able to perform. So you should do the same thing. And it's really hard to be watching and not over trading because you want to be doing something. You want to feel like you're accomplishing something. But again, it's the kind of thing, it goes back to my garlic planting and trading video, if you remember that one. But it's talking about when I first started trading, the first few years, I want my time and effort to be showing me that it has been worthwhile now. I want the effort that I'm putting in this month to be reflected on my profit and loss statement this month. That's not the way it works. My effort from 5 years of trading showed up in little ways, but it really showed up in 2017. And so you are preparing yourself for market environments long into the future that we do not know what they're going to be like. We're going to be trading anti-gravity technology stocks that are in blue sky breakout and going up 200% in the last month. And so we're going to be ready for that. It's a multiple decade long game. Patience, patience, patience. And just don't blow up your account in the meantime. All right. I don't know what's wrong with my YouTube. I wish I could see what you all are saying. Unfortunately, maybe if I refresh, but it's telling me my chat is disconnected, which is why I talked for so long. But there we go. Gotcha now. How did I come to use wicks in my trading style more than candle bodies? Because wicks are price. Wicks are the actual levels that were hit. We hit a level, we stopped going down, and we bounced. That is the level. And the candle closes mean a lot less to me because everything's a different time frame. Is it a 5-minute candle close, but the 15-minute candle is not closing? If the 15-minute candle closing, but the hourly is not closing, so which candle close matters? It doesn't matter nearly as much to me. It's price. It's the price levels that are hit. The bodies can help us determine whether it's a break with no follow through, but closes matter very little to me. In the stock market, where we close matters a little bit more because we then have that big gap of no trading. But in a continuous 24 hours market, candle closes mean nothing to me in crypto. I have not made a decision based on a candle close in crypto trading, I don't think ever in my life. Why don't I trade low float stocks like all the other day trading YouTubers? I used to, that's how I started out. But trading with more significant capital means trading illiquid things is much more difficult. I can market buy a $200,000 position in Tesla and it feels like this with no slippage, maybe 5 cents of slippage. If I do that in a low cap, I can run the price up 3%. I also don't want to be trading anything where if I say I'm in this position and then I don't ever want to see me saying I'm doing something reflected on a stock chart because other people are then acting on that information. That tells me it's too illiquid, which is obviously what all the YouTubers enjoy and do intentionally on a lot of these things so they can front run their viewers. It would be very easy to buy a low cap, illiquid $100,000 position and then put it on Twitter and make a YouTube video about it and tell everybody in our Slack chat room. And I can make money very easily that way, but that makes you a scammer. And it makes you a bad person. All right, we'll see how the NASDAQ breaks here into the close. Hour and a half left in the day. I appreciate you watching. So these streams, the more boring we get, the more it's just going to be, soapbox, random thoughts. And I appreciate the interaction from you all because that helps guide my brain down certain paths. Any Bitcoin targets for long-term investment? If you're going to dollar cost average, you're just buying a little bit every month, starting now. Because we are in a fearful enough environment where it makes sense to do so. But you have to anticipate, mentally, this money is zero. If you are DCAing, dollar cost averaging, into a long-term position, you have to have that mindset. Because otherwise you will have negative, detrimental impact on your emotional and psychological well-being by watching something be consistently red. As a trader, I get into something that has momentum in my favor, so I'm instantly green. That's the goal. So I don't sit through any red. A dollar cost averaging mindset or an investing or a long-term mindset is very different. Can you only trade bullish on Binance US? I believe so. I would have to double check. I was considering Binance US a bit ago. The issue within the US, if you are shorting, you are required to be on margin, and that comes with a whole bunch of regulations, which is why there are so few legitimate platforms that allow for shorting. That's where the regulation is needed. All right, so long story short, Bitcoin is still extremely weak. I'm not seeing anything that makes me bullish whatsoever. We can have a big spike up out of nowhere, but that's the kind of move that I miss and then say, okay, now I'm paying attention. But again, if we don't get anywhere near 21.5 thousand, we're not doing anything to change this downtrend. And if you want to keep it really simple, say to yourself, if weekly EMA 12 is resistance, nothing is changing. Resistance, 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 not even close to testing it at this point. Get over that, and we can then start talking about maybe a more significant bounce taking place. But until that happens, it's like the bumper lane in bowling. It's just the bumper that is keeping the price contained. Fidelity does not offer shorting. I'd have to double check, but I'm 85% sure Fidelity does not offer shorting for crypto. It seems more like, and you don't get the actual coins either. It's just paper coins. So that would be more like my capital is stuck on my brokerage, but I want some exposure to crypto. Then you have that option. For traditional market brokerage, it's either Fidelity, TD Ameritrade, or Interactive Brokers as the main ones. I used to use Coinbase Pro. I took all my money off of it when the FTX stuff was going down, and I am in no rush to find another home for trading crypto at the moment. I am going to be starting to trade stock futures in the start of the new year. That's going to be a majority of my focus, but I can have, funds back on Coinbase Pro very quickly if something were to happen. But patiently waiting and feeling it out, but in no rush to do anything because it's not like I'm missing opportunity. Can you trade relative strength in crypto pairs as a way of shorting? I'm not sure I fully understand. I use relative strength and weakness all the time to determine which names are better for shorts and which names are better for longs. I will make content on futures. Again, I'm going to be brand new, so it'll be a journey. But I will definitely make some content about it as I learn about it. I'm going to start in a week doing some research, getting ready, and then I'm going to start very, very small. I'm going to start trading one contract at a time while I get used to the platforms and the position sizing and things like that. So I'm in no rush. I'm going to take it slow, but looking forward to that new market. Just something new, change it up, new challenge. Why haven't I traded futures until now? Because the majority of my gains are in hype sectors. Crypto, cannabis. The cannabis sector goes up 1,000% over an 8-month period. Stocks and futures aren't doing that. So my specialty is jumping on hype and euphoria and then keeping the gains once we top out. And so now that we don't have those happening nearly as often in this current market environment, now I'm going to futures because, okay, we're more range bound and now futures make a lot more sense because the significant opportunity of sectors going up hundreds of percent while the market's only going up 40%, we're not seeing those opportunities anymore, at least in this part of the cycle. All right, appreciate you all tuning in. I got to edit this video. I hope you're all great. Do good things. Thanks for the likes. Let's get back to 100, back like the good old days when we were at 20,000 Bitcoin. We'll keep checking in. I enjoy interacting with you all. And again, we were here through the whole bear market in 2017, 2018. I guess not 2017. 2018 bear market. And there was more opportunity back then on the bounces, at least in my memory, because I was green playing bullish in 2018. these bounces, 50% bounce, 40% bounce. And we've had a few of those, but not as big. That's a 30% bounce. And that's a 50% bounce. But less opportunity in my opinion. And a lot of that had to do with liquidity. Less liquidity back then meant the moves in both directions were more magnified. See y'all next time.